welcome on board Hemang Jani to talk to us about what else is happening in the market. And Hemang, let's begin by talking about Five-Star Finance. DAM Capital has actually initiated coverage. They have a target price of 1,000 rupees. And since its listing, the stock has done rather well for itself. It's 700 rupees right now, and they're expecting a 30% uptick. And the ROA levels are just stellar, what, 8 to 9%?
Yeah, good morning. See, what we've seen is that recently there is a big block deal where a prominent investor has picked up the stake. Secondly, after that regulatory nudge for some of the NBFC on the unsecured lending part, I think the business model of Five-Star business is actually much better, vis-a-vis some of the larger companies, in a space where they have a very large component of unsecured lending. So versus that, Five-Star business is better placed, and the performance, because of the lower base, because of the better processes, is much better. So I would surely have a positive view on Five-Star business, both from a short term as well as from a 12-month perspective.
All right, fair enough. Meantime, Hemang, let's also get in your take on some of the large cap stocks that really took center stage yesterday. And it was across the board that you saw a rally play out. But in particular, you had autos, which saw a formidable move. How do you characterize the year gone by for autos, and what would you believe is going to be the key trend or some of the top players for the next year?
So clearly, almost now for 2.5 years, the auto sector is, doing pretty well. Though in terms of volume growth, when you look at the PV category, the volume growth is not more than 5-6%. But what is encouraging is that the two-wheeler space has seen a very remarkable turnaround in the last about 3 months. And also, you're going to see a new IPO, Ola Electric, which will also have some kind of a effect on some of the incumbent players, particularly TVS. So I think overall view in two-wheeler space is quite positive. Number one pick would be Bajaj Auto because of the stellar performance and attractive dividend yield also. And the second one would be Hero Motor because of slightly better valuation vis-a-vis some of the other players.
Mang, what are your thoughts on Indigo at current level? It has very quietly, irrespective of what's happening in crude, come from 2,200 odd to almost 3,000 now, and commentary coming in that even for 2024 they are guiding that the volume outlook is pretty strong. They have a dominant share out there, barring a few complaints every now and then you see on customer service on Twitter and all of that, but largely they've maintained their dominance in that space. Do you like it even at current levels?
Absolutely, Ajay. I think Indigo has displayed a remarkable resilience even while the prices were higher. The company could actually navigate that phase pretty well. Now you are in a Goldilocks kind of a scenario where the prices have pulled off, the passenger traffic is showing a lot of traction, and more importantly, the international travel, is getting much better, and that is a relatively higher or profitable segment to operate in. So I think Indigo, though the stock has run up, it may look a bit expensive on valuations. From a positioning perspective, from an allocation perspective, surely I would go with Indigo as a high allocation.
All right, let's get, of course, the big rally that we saw in PSUs this year. What are your expectations about next year? And if you think the rally will continue, which specific pocket? Power financiers, railways, defense, these metal mining companies, and the banks?
Oh, I think as we are heading towards election in the next about 5 months or so, clearly ahead of that you will see a little bit more action across the names that you have highlighted. But if one is looking to participate at current levels, I would have banks as my topmost recommendation, particularly State Bank of India and BOB. These are the two names where we think that there is a larger comfort in terms of valuations and risk reward. Apart from them, metal stocks is where we are seeing relative strength now, last about 1 month or so. So NMDC is something that we've been liking. Lower valuation, much higher volume growth, stable pricing in the domestic market. So metal would certainly feature in that list. the other pockets, whether it is the power, the railways, the defense, I think we are at probably fag end of that entire rally, and we should be looking to basically play the momentum with a proper exit plan. Because typically when the large part of the positives are priced in, you may see a little bit of a cool off. So I think I'm not too comfortable entering into those pockets at this point.
I have a question out there with you, Hemang.
Other logical way to look at the valuation of these companies would be what is the EV to EBITDA, what sort of sales profitability that they're reporting, and most importantly, Ajay, the growth and the valuations at which you are entering into it if you are looking to enter at this point of time. So you have also seen large cap companies like Ultratech, which was up about 4% yesterday, right? So there is absolutely no such thing that because the company has a certain market cap, the possibility of additional return on alpha is less. It's all about your assessment of the earnings, even if the valuations are on the higher side. So Coal India, I think the commodity space is coming back. We've seen how the volume growth and realization picture is looking like, and is not very expensive in terms of valuation. So it's a commodity stock, so it will always have that lower valuation. But I think I would not be surprised that some of the large cap companies would surprise us in terms of performance versus some of the small cap and mid cap companies which had a great party in the last 6 months.
Right on. And Hemang, focusing on some interesting food trends and travel trends for the year ahead. I believe that actually airlines are undergoing some discounts as we're approaching the new year because flights aren't as packed. I don't know. I would beg to differ, I feel, when I head onto the websites to book. But just going by this trend of premiumization, the rising incomes, urbanization really picking up, how do you see a lot of these, hospitality-linked, airline-linked, travel-linked sectors and stocks performing for the year ahead, even QSR and dining plays?
So what you said is right, that though it's not a new theme now, we've seen how these stocks have done well over the last, let's say, almost about 1.5 years. But what is very important to see is that while the stocks have run up, the visibility in terms of growth for this year is looking even stronger, more so for the hotels. Because as you see, this Ayodhya, we are going to see the inauguration in Jan, and the kind of excitement that is going to get built around it. And apart from that, you will have people undertaking travel post this winter season, vacation, etc. So I think that theme will continue to do well. And within the hospitality, I think Lemon Tree, Indian Hotels, these are the two names that we've been liking. And I think at this price point, valuation point, also they are looking equally compelling.
Earlier, small banks. So first, there are two, regional banks, if I may call it. J&K Bank at 20-25 bucks, nobody was ready to look at it. 10% was the NPA level. Last 6 quarters, very sharp improvement in their performance, and Street also rewarded it, not to the extent that at 125 when they did a QIP, it was massively oversubscribed. At 6 bucks, South Indian Bank was not even considered investment grade. But at 30 bucks, they are coming out with their QIP. You see a case in some of these regional banks even now?
Ajay, in a bull market where we've seen the worst of the asset quality cycle getting over, and on a lower base, some of these companies will continue to look attractive in terms of price to book or the growth that they may post. But as you rightly said, the stocks have run up big time. Also, when we say that South India Bank from 7 rupees has gone up to, current level, let's say 27 or so. Also, we have to reckon that when things are slightly difficult, from 40 rupees, the stock went down to 7 rupees, right? So I think these are all high beta names. So from a momentum play and those investors who look for small price stocks, they may do well in a bull market. But when it comes to investment, I would stick to IDFC First Bank or a Federal Bank. because there is a slightly higher degree of comfort in terms of valuations and growth and the management quality also. So I would suggest that just have smaller allocation as a momentum play in these names. The core investment should be, in either the large cap banks or some of the smaller banks like Federal Bank or IDFC First.
Federal hasn't done much. IDFC First has run up, but may have merit because the numbers have been improving.
Okay, but before I let you go, Hemang, and extend our New Year's wishes, for our viewers, give us some New Year picks. Which are the top 2-3 sectors or stocks that you like at this point of time?
Yeah, thank you so much. And New Year greetings to the entire team, the panel, and all the viewers. Hope it's going to be a blockbuster year for investors. And in terms of picks, so banks is something that we've been liking. So I would go with the Bank of Baroda. I think it has a potential to give another 20-25% kind of a growth. The second one would be the power, space which is doing very well, and you will have a slew of investments, IPOs, and announcements over the next 3 to 6 months. So Tata Power is something that I have been liking, and I think from a 1 year perspective, it can give another 25-30% kind of a return. So these are the two pockets names that I like at this point.
Okay, Hemang, on that note, we let you go. Thanks so much for making time and speaking with us. 9:05. So let's track if there is some